Good morning, I'm David Kospel and this is Saxo Bank Market Call. Today is the 3rd of December. On Friday we saw personal income and spending basically as expected in the US, and regarding Canadian GDP figures, they were somewhat stronger than expected at 2.9% versus 2.1% expected year on year. The Chicago PMI was out at 52.9 versus 50 expected, and the US construction spending was out somewhat weaker at minus 0.8% versus minus 0.3% expected. The Aussie trade balance was much worse than expected at almost 3 billion versus 1.8 billion. This is a deficit expected. Euro-dollar is still trading firmly below 147, and dollar yen is back at 110.50. We're seeing some dollar strength, in other words, and stocks largely higher in all regions, all sectors, and fixed income rallying, fueled by rate cut expectations. Now 38%, according to Stir Futures, derived probabilities expect a rate cut of 50 basis points on the 11th of December FOMC rate decision meeting. Commodities, crude oil again higher, edging close to $90 per barrel, and gold and silver also going slightly higher, but they are still significantly lower than the previous peak from 1 month ago. So what is going on in markets? Well, currently we might see some support for stocks as the leaders from the mortgage industry and the Treasury are out finalizing a plan that could fix interest rates on mortgages to prevent them surge from mortgage defaults. And last week's equity rally, we've seen this rally being supported by the heightened expectations of rate cuts in the US, and that's usually a very good sign for equities that rate expectations are going lower at the same time as the M2 money supply is accelerating in growth, and that is exactly that kind of environment we have right now. So it seems that we have a good chance of a Christmas rally in stocks. But nonetheless, we are still bearish, at least for the year 2008, where we believe the S&P 500 will test the 1172 level. Also, despite the equity rally and Treasury plans, carry trades are unwinding, and that might be related to the fact that Moody's is out saying that they are planning or preparing the biggest rating cuts since the start of mortgage defaults around a half year ago. The calendar today is rather thin. At 15 o'clock we have ISM manufacturing and ISM prices paid in the US. The ISM manufacturing is expected at 50.7 and prices paid expected at 65.5. The next couple of days we have Canadian Bank of Canada rate decision. We have Aussie retail sales and the RBA cash target. We also have the Reserve Bank of New Zealand official cash rate target. We have Eurozone retail sales, and we have on Wednesday, very importantly, ADP employment change, non-farm productivity, unit labor cost, and the ISM non-manufacturing, which is quite important for the US dollar and for the US rate outlook. Of FX trading strategies today, we have dollar Canada on the upside. We are long in a longer term trade, but we also recommend being long if it breaks intraday. So we have a signal to go long at 1.0010 bit, targeting 101, and a stop offer at 0.9979. Although we saw strong Canadian figures on Friday, the upside still looks attractive. On equities, we believe that we'll see support for equities today in this session due to the larger expectations for a rate cut in the US, and also we have seen a rather strong momentum, and actually looks like DAX, for example, is reaching for new highs. That could happen in this week actually. And we have a strategy out to buy Atos in Atos Origin, traded in Paris within the entry range of 38 to 39, keeping a stop loss at 36 and targeting 44. On futures, we have a strategy out to buy oil, buy crude oil at 89.90, around that area, and stop below 89.40, targeting 91.50 first and this is related to the OPEC news. Still the driver that they are still saying $95 per barrel is a fair value, and then it will have a hard time increasing production significantly from here. Also, we are positive on fixed income and gold and silver. That is it for today, and thank you for joining me here on Saxo Bank Market Call.